Well, looks like you're the only people dedicated to learning coming this close to the holidays that want to grow your business. So that's all right. When everybody else is, drinking eggnog and doing things, you'll be signing contracts. So we're going to get started in just a minute here. Um, and I have Megan who is going to tell us about the reverse to purchase. So we'll just give it a minute, finish up this call, and then we'll dive in and we'll dispel some of the myths, Ming, on reverse purchase. We're going to dispel the myths that you shared with me in the beginning about stealing of seniors' homes and probate and all that stuff.
Yeah.
So he's a
I was like, yeah, I don't know if I want to destroy people's lives.
no, that's good.
At the end of the day. But I did go to Triple Bay and at the convention expo. There were I think like cross country. There was like these old ladies that were.
I heard about them. They were with Nam.
Yeah.
They were dancing.
Yeah,
A builder friend of mine sent me pictures.
They were dressed up as grandmas.
Yeah.
Like a cape, but like bling out outfits.
Wait, they
I mean, they were, but that's not how they dress usually. It was costumes, and they were like, and then I was like, "What are you promoting?" They're like, "Reverse mortgages."
Yeah.
They were like old grandmas working on reverse mortgages.
Oh my goodness.
Yeah, I heard about it. That's so funny.
I was
Yeah.
like, "Are you serious?"
Now.
Who's that?
National American Finance.
That was the marketing team.
Oh my goodness.
Yes.
Yeah, we are.
Yes.
We are.
Because my friend sent me a picture. Now you're telling me about it. So.
I went in to hang out with them. I was like, and I was like, they were like retired. They work in real estate. They're mortgage lenders.
Yes. Yep. Yeah.
But that's really it was hilarious because like they had all of the outfits. They had all of these games.
I have a picture. I have a picture on my phone. My friend sent me a
They
picture.
were wrapped people with the cane.
Oh man, we were missing the mark.
They made a big commotion. They were like deliberately drawing tons of attention to themselves.
I know, right?
In the aisles, dancing. Oh, this is Connie sent me this.
So
Nick's cousin, Nick's, I tried to call him up. They're there.
you're leaving for your.
Oh, that's so funny.
This is right here, right?
Oh yeah.
Yeah.
Oh my god, they were so hot.
I'm going to let Megan get started. Megan is honestly the subject matter expert. So seriously, we do hope that you'll come out of this with some tools, a better understanding of the product, and some tools to generate some more business as we head into the new year. And I know there are some people on Zoom as well. So thank you for joining us. And Megan, I will let you take it away.
Thanks, Chris. Yeah, I'm Chris's partner. Like we are on the same team. All I do are reverse mortgages. Okay. And you'll see if I slip with my acronyms, HECM is a home equity conversion mortgage. Same thing as a reverse mortgage. It's a HUD insured product. So that's what we're going to talk about. Feel free to interrupt me. I have my PowerPoint to rein me back in here. So I'll make sure that I go through everything. We can share this with you. And I want to start with the video because you'll see I'm going to spew a bunch of facts and figures at you. But these, if you're not introducing these to your clients, I can promise you somebody else is. The numbers are staggering, the equity in seniors' homes. We expect, well, here, I'm going to let him speak. This is a dynamic speaker. And this is about 3.5 minutes long. This I came out. And we're a small tent.
2022, like the house industry.
Sorry, no space. How do I mute myself?
Sorry. I'm on Zoom, but I gotta go.
Can you make sure you're both muted and deafened on your phone?
Relentless, ultimately committed, fighting for major workers' rights and serving winning isn't just a goal. It's a for an experience or winning strategy in action for you. Consider and come for the win.
2024 will bring the housing industry a ton of opportunity. But here's one you know what's up. Realtors and lenders and builders needing a boost to your business, listen up. The strategy impacts about 40% of the homes purchased last year. Let's say
40% seniors.
believe it or not, I've been working on this opportunity for some time, pretty much all of last year and already this year as 2024 kicks off. And it's good to see the industry is catching up as well. I was aware of 2 articles last week, so the cat is out of the bag. What is it? Well, it's reverse purchase finance. Big reveal, yet many of you are still scratching your head going, what the heck is he talking about? Realtors literally grab your lenders right now and force them to sit down and watch this with you, and more importantly, go execute afterwards. Believe it or not, the old product that Tom Selleck and Tommy Lee Jones used to talk about is a hidden gem now in 2024. Rick, does that make me the new Tom Selleck and Tommy Lee Jones now that I'm talking about it? Anyways, depending on who you ask, reverse mortgages have a bad name, but like most things, the narrative or the current belief is oftentimes not rooted and grounded in data. Much like last week, when we develop a myth, that rates go down in the election year. So set your current beliefs aside for now. Reverse mortgages aren't just a refinance tool to help mom and dad tap into their equity, it's something you can payments. It's also a purchase tool. As I mentioned earlier, in 2022, baby boomers made up the largest generation of American home buyers. They accounted for 1.9 million properties, which is equal to 39% of the total homes purchased. And with 12,000 Americans turning 65 every day, this strategy will continue to bring opportunity for realtors, lenders, and builders for the next decade. Now, the lender can get into particulars with you, but let me highlight the opportunities for really real quick. Builders typically have a lot of equity, right? And many are also on fixed income, so the monthly cash flow can be limited sometimes. Well, if you're 62 or older, you can purchase a new home with a reverse purchase strategy and make no mortgage payments. Still have to keep up with your taxes and insurance, but the mortgage payments are set aside. Guys, of course, every situation is different, and each family should look at their options at a much deeper level. But this is a massive opportunity that literally no one's talking about. It can allow our parents the ability to purchase a home and limit their monthly exposure. Yes, down payment requirements are higher than normal, but again, look at these options specifically with your lenders. But if boomers are 40% of the market and almost no realtor or lender is talking about or even offering this option, then team, you have a massive opportunity on the hands. I'm telling you, the silver tsunami is coming our way. Realtors, lenders, and builders, before you even know that it exists, even know how to capitalize on it, can you even articulate it? Think about the opportunities just from a builder perspective. How many subdivisions are being built?
Builders love this. Over 55 builders love this.
Literally, there's no reverse signage literature for financing options on any of those projects. That's insane, folks. We're even talking about this. Builders don't even know. Very few realtors or lenders even know until now. Finally, the word is out. Heck, Ginnie Mae is even working on a new reverse mortgage-backed security. That gets built, guys, and we're going to see a ton of these in the future. We'll fix one of the challenges that has been holding back the scalability of the reverse product, which has been liquidity. Now that's being addressed as we speak. So now it's time to get educated and start spreading the good news and uncovering the massive opportunities that do exist. I don't even need to ask you to share today's show because I hope you're already thinking about that. If not, this is a show that you share with the entire office in company and plan your team meetings. Get educated, get with your lenders and your builders, and for God's sake, guys, go execute on the plan. See you next week.
Oh, I can't advance it. Oh.
There we go.
Here's the stats. How many of you have ever worked with seniors 62 and older? Are they any of your clients? Okay, good. Look at 14 trillion in equity for people 62 and older. That number is staggering. It went up $1 trillion this year. 83% of senior retirement funds are held in the equity of their home. And by 2025, the first batch of generation Xers turns 60. You all can read this. We anticipate HECM for purchase, reverse for purchase to blow up next year. Okay, and then this is some more stats that you can see. Look at the buyers who financed their home purchase in 2023. And last year, look at the numbers, seniors, okay? I'm going to touch today on, these are the options with the reverse mortgage. You can use it as a refinance. You can get a lump sum, fixed monthly advances, growing line of credit we're going to touch on, and a combination of these. You all have a lot of database customers, right? I just got a call right before I left from a realtor that's looking for a client to do a reverse mortgage. It just makes you knowledgeable on all things if you have this in your arsenal. So the HELOC alternative, I want to talk about the line of credit for a moment. With the line of credit, financial planners that's most of my referrals right now are coming from financial planners, and I'll tell you why. And it's not for people that this is a last resort, it's for their very affluent clients. The reverse mortgage line of credit grows 0.5% higher than whatever the current interest rate is. Guaranteed growth, tax-free. They can draw on it whenever they would like. So think about it. So think if you're a financial planner and you have clients with all of their assets in your portfolio that you're managing for them. But now they're 62, they're no longer working, they are using, they have Social Security only, have plenty of assets, but to have access to a line of credit growing for them, to be used for the what ifs down the road, in-home care, people want to age in place. If their car goes, that keeps their portfolios intact, guaranteed line of credit growing throughout the lifetime of the loan. And we're going to get into today the home financing option. Here's an example of the line of credit. 62-year-old with a $500,000 home. We set up the line of credit at $150,000. In the next 30 years, if rates remained where they are right now, they'd have over $1 million to access when they turn age 92. They can request those funds and they will be in their bank account within 5 days. Always available to them, tax-free, promise. It doesn't matter if that home value has dropped down to $300,000 now. It still will grow. It's guaranteed growth, 0.5% higher than the current interest rate. Okay. Yeah.
What index are the financial advisors using to invest these funds? And do you have your series as well, or are you just?
No, it's not an investment.
Okay.
So the financial planners they have their clients' fund, they're investing their clients' funds. They set up a reverse mortgage line of credit. Think of it like a home equity line of credit. The difference, it's unique to the reverse mortgage program that line of credit is going to grow I keep saying it, 0.5% higher than the current interest rate. We use the 1-year CMT. So the loan balance is going to be growing, so not required to make monthly payments. And this line of credit is going to be growing 0.5% higher.
Is it attached to an index?
No, it's attached to the interest rate that's being charged on the loan balance.
And the financial planners are not investing those funds?
No.
And how is it?
They're just sitting there available for the asking. Whenever they ask for it, they can use it for whatever they want. It's not necessarily tied into the investments, just like a home equity line of credit if you went to withdraw those funds. If they don't use it, it's retained equity, just like a home equity line of credit. If they do use it, it's added to the loan balance, and then it'll be charged interest. It would need to be paid back at the end of the loan.
You see it grows at a percentage of the current interest rate, what interest rate are you referring to?
The interest rate on the loan. So let's jump into purchase for a moment. The purchase is one thing I'll point out with reverse for purchases. You're all used to your clients needing to invest 20, 10%, 3.5%. A reverse mortgage is not, they need to invest much more. So the thinking with the reverse mortgage is that they're purchasing a home, and I'm going to give an example. But they don't want, they're retired now, they don't wanna put all their funds in the home. And they don't wanna have a monthly mortgage payment. So they need to invest a portion of the purchase price. We'll lend them the remaining funds and they're able to stay in that home for as long as they want. So combines a one-time investment. The maximum lending limit actually just went up to 1.2 something. They make a down payment of typically 35 to 65%. The amount we can lend them is based on three things. It's based on their age, the current interest rate, and the appraised value of the purchase price of the home. The older they are, the more we can lend. The lower the rate, the more we can lend. So in the past couple of years, we lend a lot less. Non-recourse feature unique to the reverse mortgage. What that means is only the home can be used to pay us back if more is owed at the end of the loan. HUD guarantees that. So no personal assets are going to be used by the buyers, their heirs, or their estate to pay this loan back. HUD steps in and makes up that difference. It's called non-recourse feature of the loan. No matter what, it's promised.
Sorry, can you just repeat what you said is a non-recourse feature? You need a sign, obviously not liable, but what about the heirs?
No, heirs walk away as well. Only the home can be used to pay us back.
What if the heirs inherit?
If they inherit it and want to stay in it, they can purchase the home at 95% of the appraised value. Not purchase it. They have to pay back the lien that's on the property, but they then can own the property for 95% more is owed.
Of the appraised value,
Of the appraised value.
Why would the loan amount exceed the loan value?
Because they're not making any mortgage payments, so it's a negative value loan. So the loan balance is growing. The value of the home doesn't impact this loan until they go to pay it back. So if he predeceases her, she's still able to stay in that home.
Okay, so the chart that you showed earlier, was that the balance growing or was that the?
That was the line of credit growing.
That was the line of credit growing.
Yes,
But also the balance is also increasing as
the
well.
balance is increasing as well.
And what is the correlation between that line of credit appreciation and also the balance growing as well? Is it usually like equal to one another or
No.
Well, is there one more accelerated compounding than the others? Like, what are the computation factors?
The loan will be charged, its interest rate, the loan balance. And the line of credit, whatever is established at settlement, that will grow 0.5% higher than that current interest rate.
So theoretically, should never be, loan shouldn't be under that line of credit unless you use something. with the line of
Yeah.
credit.
Yes, exactly. Yep, exactly.
So but then. So can you go back to the last slide for a second? Because I'm just trying to, wrap my head. So. Say the home is worth $500,000, over the next 30 years, the line goes to 1.4 million. Over the 30 years, pretty unlikely the home is going to appreciate to that amount. So, if someone went crazy, took out the whole 1.4 million, used it all, and decided screw it, I'm not paying it back, home's only worth $600,000. They're not touching anything. They're just going to trade 1.4 million for a $600,000 house.
Yeah, if they pass on, then they took all that money out. And now they both pass away or they sell the home. They're only responsible for paying back the value of the home. They can walk away.
Well, what if
I know a story, a financial planner wrote a book that gave an example of the line of credit. So he had a client that established it at 62, and they waited a couple of years, and the line of credit grew. They withdrew it, purchased a rental property, did it 3 times. He then in his 80s was like, now I'm done, I'm retired, paid 3 rental properties and still line of credit.
So what happens to the loan in that situation?
It's non-recourse, so it doesn't matter. The line of credit is promised to be available. A unique feature to the reverse mortgage. The loan value, the loan balance is separate from that. Anything not used in the line of credit is just retained equity. If they take it all out, Nobody's evaluating that loan balance for the lifetime of this loan. So at the end of the loan, they're responsible for paying back the loan balance. If the home sells for less, they walk away. That steps in. Makes the lender. Yeah.
But like, and the solvency of it all. So like when you're financial planners, you're like evaluating, okay, the principal has increased, but then also like their interest appreciation of the line credit has increased. But then they make requests for withdrawals, and then the financial planners start taking a look at potentially the volatility of that non-recourse component. And then like if then they pass away, but they withdrew more, and then now you have to tap into HUD to reimburse you for the insurance policy. Now we're putting HUD in a situation where there might be that bubble effect of the solvency issue.
Yeah, but HUD's, they correct this. So back in 2008, remember we had all that housing market crash? They were lending a lot more. And a lot of them were upside down, the reverse mortgages. So what they did is they lowered the amount we could lend now. We used to be able to lend up to 70% back in the day.
But is it,
And as a result of that, they reduced it. I keep waiting for them to increase it again. They haven't, especially with rates going.
that's such a volatile potential situation.
So what's the limit now?
Typically, there is retained equity at the end of these things. What is what?
Limit is the reduce the limit, they can,
The amount we can lend, yeah.
how much is the one?
It depends, it's we factor in age, price value, and the interest rate. Older they are, the more we can lend, because the loan is short. So here's how HUD for purchase compares. I'm gonna jump into this for a moment now. For 62 and older, it's available for people 62 and older. You can have a spouse that's under age 62 and they get the same protections. No monthly mortgage payments required. The people own the home with a reverse mortgage, and we don't take the home. It's a myth. Okay, we never did. When you get a mortgage, your responsibilities are paying your property taxes and homeowners insurance. And if you don't, what happens? It's due payable, right? The reverse mortgage is the same way. You own this home. You'll have to pay property taxes, homeowners insurance, association dues. People weren't, and I'll get into that slide as well. The loan balance grows over time. The tax benefits are the same. The interest paid is tax deductible. However, you're not making payments with the reverse mortgage. So at the end of the loan, it's when you go to pay it back.
But so when people are like, oh, they took my home, it wasn't, you just had a lien on it. So the title company has to satisfy that, even in a non-recourse. So you're not like initiating foreclosures or repossessions.
No, never. And in fact, way back when, I feel like this slide isn't in here. I'm going to just look real quick. It's not. I'm a little thrown off. One slide's missing.
Like those kids are like,
Sure. We do this so much. All right, I'm going to talk a little bit about, let's talk about the NISP just one. So when this program first came to be, it was back in 1960 when the first one started. And then Reagan signed them into a bill back in the 1980s. It kind of went along, and anybody that wanted a reverse mortgage that owned a home, lenders could just drop the application and set them up. And what was happening was oftentimes it was a band-aid for her. They couldn't afford the home, right? And then she lost her husband and then lost that social security and couldn't make the property taxes and homeowners insurance. And the big banks were in it back then. They were profitable, and I worked for Bank of America. And she wasn't paying property taxes and homeowners. And the big banks look the other way because it doesn't read well, right? That this woman, because just what you all think is exactly how it read. They had big targets on their back. The Bank of America kicked her out of this 85-year-old widow, out of her home, took her house. They never said that she wasn't meeting her obligations of paying taxes and insurance. That was, nobody ever heard that part of it. And the banks actually looked the other way a long time, and then HUD finally said, no, these loans are due. You gotta call them due and pay them. So the banks immediately got out. That press. So what happened in 2015 was HUD then said lenders are required to evaluate two things. They're not making a monthly payment, so we don't need to evaluate their ability to make that payment and pay it back. We look at capacity and willingness. So capacity is, what is their monthly income? What are their property charges? What's their revolving debt? And is their residual income of it's 906 in this area for a couple left over so that they can buy groceries and do all of that. If they're short, I can say, well, they have $100,000 available to them with the reverse mortgage. So let's factor that in. So then we get a thumbs up on capacity. The next thing we look at is willingness. Have they done it? Do they pay their property charges on time? We look back 2 years. Now with a regular mortgage, then, it's not, we can't do it. With a reverse mortgage, if they haven't paid things on time, with the proceeds available to them, we set aside for taxes and insurance. And we base that on the life expectancy that my computer spits out. So we will then set aside for taxes and insurance, and our servicing department will pay them on their behalf. So they truly are living in the home for free. But we need to evaluate that this is a good option for them. We need to evaluate that they have the funds and that they do pay their bills on time. And if they don't, it doesn't disqualify them. It just they need to have enough funds to set aside.
Because you were saying about having to pay your property taxes, when the sheriff's department initiates a sheriff sale, possession of the property in a sheriff auction. But you're preventing that because you're gonna intervene if that was to happen, and then
we're not going to intervene, we're going to evaluate it up front. Once they enter into the mortgage, it's their responsibility if we haven't set aside. But it's just like with any loan, if you own a home, you need to pay property taxes.
And then I guess if there's other liens attached to it, then when it comes to close the property, you're gonna get whatever negotiated distribution is after all of the other liens.
I didn't hear the beginning of your question.
Like if there's other liens attached to it, like other mortgages, other
good
things.
question, yeah.
Yeah, and then now all of the mortgage lenders and agencies have to negotiate the division of the equity to repay.
No. If there's a first lien, we need to pay it off with proceeds. We have to be in first position. And a lot of people get these to pay off a mortgage. I'm doing that a lot, and they're short to close these days. So I can't do it unless they want to bring the funds to the table. If they do have the funds.
Megan, I think the one thing that Megan mentioned that is just a big thing is there's such a myth, meaning even just jokingly, a handful of you in this room and other people that I've talked about the product are like, oh, that product where people don't own the home, except the other office before I came here, I said, oh, that, who wouldn't want to do that? And I said, no, the client still owns the home, they have the same obligations, but one of the biggest things were the changes in 2015. This is not a product that's out there for somebody that's desperate, and has no money, that can't make their mortgage payment. It used to be used that way, and those people, they didn't pay their taxes. Things happen, and that's why the regulations changed in 2015. So it is a different product with a lot more safety grills. And to be totally transparent, Megan and I, you had a conversation with my wife's parents who own their own free and clear. They're on a fixed budget, the house needs some upgrades. We're evaluating it for our own parents, and it's like, hey, we can let our parents live comfortably in the home and have the things that they need, or we can watch them, struggle and help them financially when the roof leaks or whatever. It's going to come out of our pocket anyway, and hope that we get this equity, this when they pass, God forbid, in inheritance. And we're not worried about inheritance. We're like, we want our parents to live comfortably. So like if they use this, live comfortably, can go travel and live the rest of their life.
Exactly.
We're not worried about, they're eating up our equity. It's their equity, it's not our equity. So there's enough in there.
Is the difference between this and HELOC, you're not evaluating their income and credit scores and things like that, or are you still looking at this?
We're evaluating it, but not to the extent to pay us back. Here's the difference between a home equity line and the reverse mortgage line of credit. Home equity line, you're required to make monthly mortgage payment, and there's a term to the loan. There is no term to this loan. We're not paid back till both of them permanently leave the home. They're promised to be able to stay there forever, as long as they pay property taxes. That's the big difference. So it's the intent of the reverse mortgage. Seniors, we saw it in that video. There's so much equity in these homes, and they want to age in place. Study after study has proven that. They want to age in place, but they'd like to release the equity they built up in the home in their retirement years. This allows them to do it.
And what are the credit scores and income requirements or pensions, social security, whatever we get out of it?
We don't look at, I don't care about the credit score, but it's an indicator to me when I see a low and something's up. So as long as there's enough funds to set aside for taxes and insurance, we're good to go.
And what's the origination fees?
Origination fees are typical to a regular mortgage with the exception of the mortgage insurance premium. It's 2% of the appraised value. The closing costs with the reverse mortgage are financed and they're paid at the end of the loan. Without the mortgage insurance premium, this program wouldn't be possible. You wouldn't have that guaranteed line of credit. You wouldn't have that guarantee that they could stay
Is
there.
there a lump sum MI with the origination fees? Is there like a lump sum percentage?
No, it depends on home value. The highest it can be is 6,000. We do have proprietary for larger valued homes, but that's a different conversation. We can always have a one-off on that. If you have a home value that's above the 1.2, whatever the limit is. I have one right now in Lake George for $5 million, and then talking to somebody down at Florida City. So who's eligible? You have to be over 62. We talked about that. We do have a program in certain states. It's going to probably by the end of next year, it'll be everywhere. That allows the homeowners that have a low interest loan, we can keep that in place and go behind it. Just, you can always call me if you remember that. And somebody calls you with that scenario, just give me a shot. The funds can't be borrowed. They can't borrow money to borrow money. So typically it's from the sale of their departure home. It can be a gift. Here's another protection that's put in place. Anybody getting a reverse mortgage needs to speak with a HUD-approved counselor, and I will spew out that list for them. They can do it right over the phone. Anybody can be involved. They want to ensure that the consumer knows they're getting a loan, and that they don't have dementia. I'm monitoring that, but you have a HUD-approved counselor monitoring that as well. And then we talked about the income. Properties that are available are single-family homes, condos. We need to get them approved. HUDs are fine. 2 to 4 family homes must be owner occupied, and they have to live in the home. Has to be primary residence. Manufactured homes, non-eligible are investment properties, vacation homes, and bed and breakfast. Think about FHA loans. Same. We talked about this, non-recourse, the counseling. There is a limit on how much they can change. We have a cap of 5%. There's no floor. They can go as low as they can go. There's no bottom. They can go as low as they can go. And the required down payment, we talked about the principal limit. That's what we use in our reverse world, that based on the age, the interest rate, and the appraised value. 2 out-of-pocket costs. One would be the counseling fee, and the second is the appraisal. Here's some specifics for writing the HECM for purchase contract that may be a little different than what you're used to, but we can always have a conversation about that when the time comes. And here's some case studies, okay? So this is a 72-year-old is selling their home for $700,000. We take out 5% of their selling costs. Leaves them net proceeds of $665,000. That leaves them net proceeds of $65,000 to go purchase a new home. With the reverse mortgage, they now can purchase price of new one-story home is $600. We're going to lend them $227. They're going to invest from this proceeds from the sale of that home $395, and look at the net funds remaining when after they purchase this new home.
Okay, so for the line of credit, was that specific to homeowners that are trying to get reverse mortgage out on properties they've already owned?
Yes,
So-
perfect, yeah.
Does not
Got it.
this.
Now, this is using it to purchase, a reverse mortgage from purchase. They can bring extra funds to set up a line of credit, which I have had people do. But this is exactly the example of the reverse for purchase, so
And that person will never make a mortgage payment.
never,
That
no,
Just went from having that fund 65,000 to 270, then not having to make a mortgage payment for the rest of their life.
So imagine your client that you introduce, if you're sitting there with somebody 62 and older, they're looking to a purchase and they say to you, well, we really want to be in this area, but I can't afford that. Or I don't want to have that mortgage payment, or I don't want to invest in everything, so let's look at a lower value home. That's when you can introduce, well, have you ever thought of a reverse mortgage? And they're gonna say, that's one where they take that home. But then you can say, give me 5 minutes, let's talk to Megan and Chris and just understand it before you make this decision. I used to work a lot with over 55 builders, and the sales associates found that, because we go in and do seminars, the builders want people on their clubhouses and their model homes, they want the foot traffic. Right, so we'd have seminars on reverse, and they had a few people say, because they were under contract and the home was being built according to what they wanted, and they commented that, why don't you ever tell us about this option? So they made a point in all of their communities, when they were people were picking out their lot, and they had a question, a paragraph, of how are you going to finance? Are you paying cash? Are you getting a regular mortgage with Chris? Are you getting a reverse mortgage? They bring it up right then and there. Yeah. It's important. And for you in real estate, your clients that are 62 and older, it shows you as being very well informed on what's out there. They may have a bad taste about it, but with a little bit of education, you can become their hero, right? It's all getting them in that higher priced home or retaining these funds in their retirement years. And here's another example. Okay, this is wants to purchase a higher value home closer to family, just what I was saying, and they don't want to drain all their savings to get into it. They get in this home, no monthly mortgage payments, no term, they stay in there forever. And we get paid back whatever we've lent them, plus the closing costs, plus the interest when they no longer live in the home. So hopefully your minds are spinning right now with how this will help you increase your business by introducing the reverse purchase. And this is the biggest point right here. It's just being knowledgeable about it. Dispelling the myths gives you so much more credibility. And I'm telling you, next year, if you don't introduce it to them, somebody else will be. Somebody else will be bringing this up. We find it all the time now.
And that's especially because of the amount of equity that the seniors have. That's why more people are talking about it. That's why it's becoming more common, because of the amount of equity that are in these homes. That gives us leverage. So, it is not just Megan saying people are talking. People are talking about it because they're looking at the numbers, demographics of aging population, the amount of equity these people have. What is their next step? We're shifting to this aging in place.
Yes.
Society. But when we put them home, I told my kids, it's put me there. I'll find you in your dreams. I will want you.
Yeah.
You know what I mean? Like, come on, I put all this time and work in to get you guys through whatever you wanted. Still put me on those places. Now let me age in place.
Your kids are 8 years old.
My daughter's 20.
20?
Yeah,
Oh,
sophomore.
Your 8-year-old like that, like what?
No, 20 and 15. They're old enough to know out their dreams. So, no, I'm kidding. So, but no, that's the reason. It's not because I don't talk about this product. It's because the market is like primed for this between the aging population, the equity in homes, and people wanting to age in place. That's why people are doing it.
Yeah, and go on Amazon, search it, there's book after book after book, AARP just came out with a new study, I wanna read it this weekend. Just came out hot off the press, AARP always had the reverse mortgage at arm's length. So they're always, it's very nervous organization about everything, but they now are leading.
We're saying.
What I just skimmed through it, I've had a crazy week, but about how people wanna age in place. And how there's so much equity in their homes, and this will be a tool so that they
I mean, AARP is advocating for reverse mortgages.
they're not really advocating, but don't hold me to it, I've gotta read it in detail, because it's long. And I skimmed through it the other morning with my coffee real quick, and then my phone rang and the email started.
How many of these have you done, and why are you specializing in this particular?
That's a good, I've just done them for, I think, over 20 years.
20 years.
I've never done regular mortgages, I used to teach. Yeah, I used to teach, and it's kind of a long story how it came to be, but my sister-in-law, was originating reverse mortgages up in Massachusetts, and she said, do you live anywhere near Doylestown? There's, an opening there. Yeah, I do, tell me more, and here I am.
So you just do.
And I closed, I've never added up how many I closed. For 10 years, I was solely with the over $55. That's all I did. And then that company shut down. And then I went to AAG, Tom Selleck, and then they went to a call center. And now I've been with cross country for 2 years, living it here. Yeah.
What states do you originate in?
Oh,
All?
yeah.
That's part of my-
We can originate in any state. Yeah.
Yeah, one of the reasons I came to cross country, which I'm finding out, and is like originate in any state, which is nice. I have one of my clients that's moving to Alabama, so it's like, actually, I can know.
Yeah.
That's why it's called cross country.
I know, normally you need to have the license, but we have people that help with that. So, but one of the things is, for me, I know that the product is gonna help a lot of people. I also wanna stay in my lane, to be quite honest. I feel, Megan's done this for a long time. This is her niche. I'm thankful to have her as a resource versus me trying to get in and figure this out. So I don't feel comfortable, to be quite honest. I think this should be left to the experts and,
Yeah, we're a partner. It should be just like me doing FHA loans or.
right, so,
Sure,
you know,
what you do.
this is really, we're gonna sit down with my in-laws, Lori and her parents, and we're gonna talk to them about it. I am gonna talk to them because I just let them know that you're not trying to steal their house. And then
Nope.
go over the sheet that you sent me, and I'll go over the sheet that you sent me, and then, I'm gonna have Megan talk to them about this because this is your world, so.
Yes.
That's what I like, is really having, it's, something where you need an expert.
Cross Country Mortgage is the #1 retail lender. And we're a full service lender. Like there's not a loan that we can't do. But we all specialize, as Chris says, we all stay in our lane and we're a team. So it's a great place to be. I'm very happy. We can meet settlement dates. I know in your minds you're probably thinking FHA, we can hit that 30-day settlement date. Okay, as long as we get the appraiser in there and the clients don't go out and buy camper. That's pre-qualified and something like that. Or retire. I had somebody retire in the middle of their home being built, 6 months, and we're all right, we're ready. And yeah, I need your income docs while I'm retired. Tell me that. Wow. And you can close more deals with hesitant clients. I've seen it. I've lived it. Yeah, especially those looking, to save money for all these things, long-term care, in-home care, all of these. Reverse purchase does not replace cash or non-contingency buyers, however, help you attract and engage. Talk about that. Oh, I want to jump ahead a little bit. I mean, open houses, we have open house flyers where we can put your pictures on it, we can Chris at the bottom, you at the bottom, and drop them off if it's geared to more like a one-story living or in an over 55 community. And I think we have an example of this in here. There it is. Okay, so that could be the picture of the property that you have a listing for. We could do 3 different ages and then 3 different amounts that they would need to bring to closing. These have been very effective. We can get these to you quickly too. You just need to call us with the address. We can pull it up, put the pictures in, and then I run the figures and spit this one out. This is what we need for a quote. This is it. Their name, the young squire's birthday, the address, the home value, and if there's a mortgage balance. And if they're purchasing, the purchase price. All we need to run a quote. And I can get it right back to you, letting you know how much they would need to purchase that home or how much they would be available to them with their refinance. Any questions? I'm sure you'll think of that.
What do you think about this marketing idea? I dressed up as the old man, the game,
Yes.
and my name is Vin. So you know Missy Elliott, already Minnie Elliott. She has like that one song where she's like flip it every person.
Love it.
Is that a good marketing idea?
That's great. Do it. Let me know how it goes.
Flip it every person.
Let me know.
Do like a little dance. Yeah.
Then we qualify for these mortgages prior to selling the property or it's in.
Yes, we can absolutely do a pre-qualification. Yeah. And I highly recommend it. Yeah. Let's pull, we can do a pre-qual credit, we'll pay them. And then I just need to know what their income is and purchase price. Yep.
You said some of the people are using this to renovate their homes, the funds from there. So after they finish renovations, you then refinance it to another reverse mortgage? Or that's
No.
or like-
You can't do it to renovate a loan. So it's an FHA home, right? So it needs to meet FHA guidelines for safety and anything that would reduce the
Like
value.
improvements, let's say they wanted, it's habitable and they wanted to,
Perfect.
but once they update the kitchen bathrooms, should they then refinance into another type of reverse mortgage or a different type of?
If it really went up a lot in value, but I need to prove to HUD that the benefit, because they're incurring closing costs, you don't pay that mortgage insurance premium twice.
Yeah.
But they would pay the difference between the appraised value previously to now, that difference they pay. But I had somebody in Cape May that they were renovating one of those beautiful homes down there. So somebody across the country gave them a reno loan and then we're going to transfer it over to them.
Oh, that's interesting. Yeah, flip the house with a regular whatever financing part money or home style renovation loans and then refinance through the reverse mortgage.
Yeah.
Flip it every person.
Flip it every person. Definitely got it. Yeah, I mean, there's a lot of creative things you can do with that. And construction too, yeah. But the reverse, the home needs to, I have one in Philadelphia right now, and she has like 7 things repairs that need to be done prior to moving in. Because they're a safety hazard. So FHA won't allow for
And
that.
doing a whole appraisal.
Also, the property will also disqualify the mortgage as well.
It won't disqualify it because she needs to get those things fixed and then we'll have the appraiser go back in. If it's a safety hazard, it needs to be completed prior to settlement. If it's something that's dangerous. If it's something that's just reducing the value, then that they have like 3 to 6 months to get that done. And we set aside what we think of what the appraiser says it might cost from the proceeds available to them. And then once they get it done, we'll release those funds.
And this is a buyer, does she already own the property?
She already owns it. She's actually in foreclosure. I know, we're trying so hard. She does not have that sense of urgency that I have.
So what's their strategy to get this reverse mortgage, satisfy the foreclosure proceedings and then have some extra cash.
Yeah, she would, yeah. And we're setting aside, right, for taxes and insurance, of course, because she didn't pay them.
Yeah.
Yeah, I just need her to get these repairs done.
And what is it usually, like a handrail, like?
Exactly, it was a handrail, she doesn't have smoke detectors, her kitchen floor is not there, like it's
It's not even.
I'm trying to think what else, and there's something with the porch, same thing, like missing boards.
Missing boards, yeah, I mean, it's usually like all of those minor details, usually is
Yeah,
assignment.
yeah, she needs to take care of that.
It's good that you're able to find us in the middle of our proceedings.
Yeah, we can. As long as the bank's agreeable, and they are.
Yeah, I mean, they went for those.
No.
It takes a long, how long does it take for those? It costs like 18 months.
I don't know. Do you know? How long does it take for close?
Right, but yeah, at least
Depends how busy they are for closing, I think.
years.
Yeah.
You like have a client and they're not gonna be a purchaser, they already own the property.
So you want a quote for them?
Yes.
Yes, just feel free, reach out to Chris, reach out to me. He knows how to contact me, so it's best to just email him if you're cool with that, Chris, or I do have cards, but yes, I can run it so quickly.
I'm gonna go to the office and they go, does anyone want a reverse mortgage?
Yes, and I can, we can send you out this video if you'd like to see it again. And other information, there's a great booklet, actually, I'm going to send that to you to send to them on, it comes from National Association of Realtors. Everything realtors need to know about purchase.
Do you want, and what's the minimum age, 55, it says?
62, but you can have a spouse that's younger.
Oh.
That's fine, they could be any age, but we're gonna base how much we lend off of her age.
Okay.